you take away from the market dynamics and how they've been trading the violence in the Middle East over the last 24 hours or so? Because, yes, we've seen a bit of a pickup in oil prices, but a lot of that was unwound as we've been through the last few hours. And I wonder what that tells us about the market's response function.
Yeah, beyond the humanitarian tragedy and the fact that we've got a war going on, from a market's point of view, this is very much an inflationary impulse rather than a risk-off impulse. That is almost always the case for a Middle East flare-up, but it's happened even quicker than normal this time, which is surprising given the news flow. So beyond markets, it's not really a market story. Beyond oil, it's not really a market story. It doesn't, prevent US corporates still making money. It doesn't stop US consumer spending. It doesn't impact really on the trade story significantly, apart from, again, energy flows. So it is an oil story, and that feeds into higher yields through the inflation impulse. And then that can also then, on a secondary effect, those higher yields, higher inflation might impact stocks, but there's not really a sustained risk-off move. So overall, the event since Friday, this has largely been taken in stride by markets, apart from in oil markets themselves.
But of course, the oil story important for the central banks who have decisions this week, Mark. Which ones, if any, are going to be the most interesting to you?
I think that the Bank of Japan is probably the most interesting, not because they're going to do anything on the rate decision, but because we're expecting to get more clarity about their plans to trim the balance sheet. As we know, the Bank of Japan just has an absolute ginormous balance sheet, and they've got a problem with long-end yields going higher, and they've got an inflation problem. They have still negative real yields. So they're still providing kind of very easy monetary policy. They need to raise rates, but that's problematic when you have so many bonds, because that keeps on putting those positions more offside. So there's a lot of uncertainty exactly what they'll do in terms of clarifying their plans to trim the balance sheet. But that's the real risk factor for potentially another catalyst for driving long-end yields higher again. After that, I think there might be a little bit of interest around S&B or Bank of England. But I think really most of them should be taken in stride from a pure rates decision point of view.
Well, Mark, you mentioned the S&B there. They're expected, at least from a Bloomberg survey, to cut to zero. What does it tell you that the two central banks that control the two kind of risk currency or risk-off currencies, the Japanese yen and, of course, the Swiss franc, are moving in two opposite directions?
Yeah, I think they've become two very, very different stories. Swiss National Bank has spent years accumulating reserves around the world and are in a very positive position. Japan, they've mainly bought domestic assets. Now, domestic ETFs have done well in terms of the equity market, but the domestic bond positions continue to kind of get more offside. So they've followed very different policies. I think Swiss franc is ultimately more overvalued and more vulnerable on a tactical basis, but longer term it's not vulnerable. Whereas the Japanese yen at some point really could have a currency crisis if the Bank of Japan proceeds with policies that end up monetizing the debt and effectively depreciating the currency.